Ladies and gentlemen, good afternoon and warm welcome to Mogo Investor Webinar. Today we are hosted by Mogo Finance Group CEO Modestas Sudnius and CFO Kreics. We will start the webinar with company's presentation covering the public offering of bonds and unaudited financial results of 12 months of 2020, which will be followed by questions and answers session. You are kindly invited, I would say even encouraged, to participate by typing your question in the questions box in the settings panel zone. Dear Modestas and Mari, I invite you to start the presentation.
Thank you, Nasdaq team for introduction, and thanks everyone on the call. Thank you for finding a time today to listen to our bonds public offering presentation. During today's presentation, we'll walk you through most actual Mogo Finance results. We'll also concentrate on Mogo Latvia, whose actual bonds are being offered. Recent results, and we'll also tell you more about business model which Mogo are using, and we'll tell more about our story. How did we get where we are now? And of course, we hope that all this information will allow you as potential investors make a more informed decision whether to invest or not invest, and then how much to invest. So I'll turn to next slide. Maybe a few words about myself and about Maris. Here, like we can really call ourselves Mogo dinosaurs, since we've been almost from the beginning of the company. I myself already 8 years working in Mogo structure. I started my career as Mogo Lithuania country manager, so established Lithuanian business, which was second country launched after Latvia. And already last 3 years I moved to our main headquarters in Riga, and then was managing one of the region, and last 2 years the whole group. And Maris, I guess, can tell a few words about himself, but he was most actively involved in all of our funding activities, and then Mogo has been very active not only in Latvian funding sphere, but also in international, since we have also published a Eurobond emission. So yeah, Maris probably will tell a few words later. I think now we can move to next slide. This is Mogo Finance at a glance, and Mogo Finance, that means all Mogo group, all countries consolidated. This is the slide, or actually numbers in the slide, which we are very proud of. If you would look at this blue table and this green section, these are our most recent financial KPIs, which we just recently published. You can see that in 2020, our total net income has grown substantially, even in times of uncertainty, even in times of COVID. So we have recorded 73 million total net income, and then that also resulted in record EBITDA, which was slightly above 45 million euros. And kind of all these results are generated from our net loan and used car rent portfolio, which is at the year end is slightly above 200 million. We'll tell you more in upcoming slides about our growth, but basically Mogo has been extensively growing the last 5 years, and despite the fact that growth usually comes at a cost, no country from day one is profitable, and usually takes around 2-3 years for a company to become profitable, for the country to become profitable. Still, all this growth we managed to achieve, always being profitable group, which is a great accomplishment. And if you look just on our results year-on-year basis, so last 5 years, our revenue on average has grown at around 35%, and our EBITDA, what I've already mentioned, just last year has grown by 45%. And since inception, we've already issued more than 650 million euros worth of loans. So what has started in 2012 in Latvia, now we can really call that Mogo has become a leading finance platform with core focus on secured lending, and up to this day we have grown to 14 core markets. And despite that, we're almost a global company. We still rely a lot on our flagship markets, Latvia being one of them. Just last year, it has recorded, even in COVID times, its record year. So we have earned 5.8 million euros. If we talk about Mogo business model, so we're very technology-driven company. We use automation, we use data technology in basically all our steps in our process, and that really helped us, especially in COVID times, when also personal mobility and mobility of our employees became very important, and many people are working from home. But despite that we're very fintech type company, but at the same time we have also big offline presence, because in every market where we operate, we also have our own branches, and our used car sales are often driven also by kind of our offline presence, because we cooperate with car dealerships. We have more than 2,000 car dealerships as our dedicated partners across all of our geographies. Now let's move to the next slide. Here you can see how all 14 Mogo markets are split in the map. How geographically do we look? Here I'd like to say that at this stage already most of Mogo markets are, as we call them, developed. That means that these markets have been launched already more than 3 years ago, and all of them are profitable. You see splits when it comes to net loan portfolios in the slide. What I wanted to mention, despite the fact that we're growing and we're in 14 markets, still our core markets and our biggest part of our portfolio is located in Baltic countries, in Latvia, Lithuania, and Estonia. And also we have 2 markets where we predominantly only issuing consumer finance finance loans. This is Albania, North Macedonia, and in Moldova we actually have two companies, 2 brands. One is focused on car financing, another one is focused on consumer finance loans. And also we have 3 countries which we call developing markets. So these are the markets which operating already at around, which were launched around 2 years ago. All these markets as of today are already profitable, EBITDA positive on a quarterly basis. And what's also interesting in those markets, since we don't have a very big historic track record there, we decided to focus on one niche secured lending segment. We're focusing on productive lending. That means that the vehicle, whether it's a car or in some cases it's a motorcycle, which we finance, it has to be used as a asset generating income. So this is so-called productive lending, and that so far has shown very good results, and it allowed us to grow very constantly there, and it provided good unit economics for the company. Now let's turn to the next slide. Here you can see our product split. So again, you can see that most of our portfolio, 81% of our total gross portfolio, is in secured loans, which are split in 3 products: traditional financial lease, sale and leaseback, and long-term rent, which is quite similar to financial leasing, but where a customer has way more flexibility in returning the car. At the same time, also we have 19% of our portfolio in installment loans issued in 3 markets. If we talk about our typical loan, what we issue when it comes to car financing, so even though we're financing vehicles, it doesn't matter how much the vehicle is worth, but our loan ticket is up to 15,000 euros, but the average vehicle which we finance is around 5 to 7,000 euros, and the loan what we provide for that is around 4,000 to 5,000 euros. Of course, there is a difference, and it depends on the market. Let's say in country as Estonia, this ticket will be way higher in comparison to country as Georgia. And when it comes to consumer loans, we're offering loans up to 3,000 euros up to 3 years. If you would look at the split at the graph to the right, where you can see our portfolio, our customer split by car makers, no surprise that it's dominated by premium German cars. Since our audience today, I believe, is mostly from the Baltics, probably if you would look outside the window and you would see it, look at the cars, most typical car would be the car also in Mogo portfolio. So used German premium cars are the ones which are most nice to drive. They preserve value very well, and they are loved by people in Baltics, but not only in Baltics, but also in other Mogo markets. It could be Moldova, it could be Romania. Of course, we have in maybe different part of the world also slightly different preferences. For example, in Georgia, Toyota is the leading brand, or in Kenya we finance a lot of new motorcycles. But nonetheless, if you look at the overall, since our portfolio is still dominated by issuances in Baltic countries, this shapes the overall car in our portfolio. And if you look at our typical borrower's profile, so this is most active part of population, people from 25 to 50 years old. Now let's move to next slide. On the left, you can see this maybe slightly complicated graph, which actually is very simple. It shows how value of the collateral, which is in Mogo's case used vehicle, how it changes, and how Mogo exposure to the client and to kind of how client's risk profile in a way changes throughout the time. So what I've already mentioned, that the majority of the vehicles we finance, they're used vehicles. In most of the cases, they are more than 5 years old, and typically car loses biggest portion of its value within first years. That means that once we finance car of, let's say, 7 years old, in upcoming 3 or 4 years, it depreciates way slower. At the same time, when we're financing our customers, we require in most of the cases down payment. On average in our group, it's around 25%. That means once we start financing, already customer has quite a lot of skin in the loan, let's say, and he had paid a down payment of at least 25%. And then with every monthly payment, he covers part of its principal, part of the loan, which decreases Mogo exposure, and then that exposure is decreased way faster when actual the car value depreciates. And then that provides very attractive risk profile for Mogo. And even in case of, which is not a favorable case, in case client can't pay its, can't follow its obligations, and then we need to repossess the car. When we sell the car, in most of the cases, we are able to cover biggest part of client's debt. And when it comes to clients which we finance, so in most of the cases, vehicle finance through Mogo is the main vehicle for the person. In most of the cases of the whole family unit, and also in quite a few cases, and especially in the developing markets, this is also a vehicle is an asset which is generating income for them, and that, given with the fact that customer from day one also kind of invest a lot into this loan, brings very attractive risk profile to Mogo. Now moving to next slide, here you can see our where do we get the customers from? If you would look at this omni-channel loan issuance graph, it does include many different markets. In quite a few we are not operating anymore, but nonetheless it illustrates the whole the whole customer journey quite well. So here you can see that it really differs market to market, but in quite a few markets we're getting a lot of customers from our partners. So typically our partner is a used car dealership. In market as Estonia, for example, which is a very digital partner, most of our clients comes through online, and where we fully identify them also through all the online solutions. And nonetheless, also quite a lot of clients actually just comes to our branches where we fill in application and afterwards goes and choose the car. So basically, whatever is convenient for the customer, Mogo provides that opportunity. And on the left, you can see in few of our markets what is the split between dealerships with whom we cooperate and actual number of branches. So let's say if we would take Latvia, we have six branches, but at the same time we have more than 200 car dealerships. So we cover with that almost all country. Turning to the next slide, this is a slide about our technologies. This is something what we're very proud of, and this is something what really drives our business forward. So on the left, you can see some print screens from our dealer portals. This is the project which we rolled out during whole 2020, and now in every single market where we operate, we also have not only our financing platform, but we also have a car sales platform where we're selling our own repossessed vehicles, but also where our best dealers using the interface which we provide for them, they can list their cars, and we're getting a free flow of customers through this channel. Of course, we're still not competing, and we don't have any intention to compete with the leading used car portals. However, it still gives us very good flow of customers. And if we talk about our sales processes, so this is few step process. Like one is online, but the biggest knowledge and then the biggest brains I could call is in the systems which are in the back office. So all the risk systems and all of our CRMs we developed ourselves. So this is Mogo know-how, Mogo proprietary technology, and that allows us to evaluate customer and provide an answer regarding financing only within few minutes. Same goes for debt collection. This is in most of the cases a very automated process when it comes to sending reminders to the customer, when it comes to even making the call. So for us, for example, for typical debt collection person, often the day starts that you just come sit at the computer, put your earphones on, and the system basically does most of the job for you, sends you the list whom to call and things like that. So of course, these type of solutions, they helped us a lot in these COVID times when people are required to work from home. Now let's move to next slide. Here you can see graphs which show how do you evaluate a car and how do you evaluate a client. Let's start with the car part. Here again, Mogo has developed everything in-house. We're not relying on some insurance databases or some government databases used to identify average vehicle price. We actually ourselves able to gather the most recent data and the most actual data about different vehicles and their real average prices from like in specific markets. That allows us within a few minutes for every customer to provide quite detailed car evaluation price. So this is the car evaluation part, and of course we're also looking at things as VIN codes, as you know, the history of a car. Sometimes we can even recommend the customer that maybe that's not the vehicle they really want to be purchasing. And when it comes to client scoring, so being a regulated entity, we have accesses in all of our markets to most available data of the customers, whether it's credit data bureaus or whether it's income or liability databases. We're also collecting quite a lot of information in our application forms, and together with a vehicle check, it provides us really full picture of customer, and it allows us, together with our IT solutions, it allows us in few minutes to evaluate the customer and to give him an answer whether we can finance him, whether we can finance that specific car, and what amount we can provide. And if we move to the next slide here, I want to tell a little bit about our debt collection process, which is, as I already mentioned, in most of the cases, the last resort. So how do we look at debt collection process? Of course, when customer starts becoming delinquent, our IT systems are sending a lot of reminders, and we're trying to find a solution with the customer so that he would get back to the regular payment graph. And at the moment when client has already missed second invoice, then we're going to a little bit more active communication phase, since our customers have a collateral which belongs to us, which is registered on Mogo's name. We try to go into dialogue with the customer whether if we see that really he can't cover his liabilities, that the most desirable option for him would be to return the car so that we could sell it and cover his liabilities, his or her liabilities. And usually we do that within the first 90 days, so quite different to I would say typical consumer lending company. That means that you know, after 90 days, when client was overdue, we in most of the cases either already solved the situation with the customer and he moved back to his regular schedule, or we already have a car in our possession and we can start realization process. Interesting to comment maybe these circles with percentages in this graph. So what I wanted to emphasize here, that you can see that the car not repossessed is 13%. What does it mean? That means that from all the customers and all the vehicles which goes into termination phase and which goes into repossession phase, only around 30% of cars we were not able to find, or I know vehicles are crashed. But in most of the cases, when we go into this as we call a hard collection phase, in most of the cases we actually find an agreement with a customer. So either customer just repays the full loan, or he renews an agreement and goes to regular schedule. However, in 1/3 of the cases, we actually do physically repossess the car, and then as mentioned before, we go into car sales process. So with this slide, I think I have covered the full cycle of kind of customer journey, starting from how we issue loan to how we do debt collection, how we evaluate the client, and of course the last step, how we repossess the vehicle. Now I hand over to my colleague Modestas, who will tell you more about Latvia business and I guess the whole bond offering details.
Sure. Thank you, Modestas, and good afternoon, everyone on the call. As Modestas already said, I'll use my time to zoom in more on Latvian operations and as well as touch upon pretty much the main topic of this presentation, which would be the upcoming or actually ongoing bond offering. So if we look at the Latvian position in the total portfolio of all the markets, As Modestas already mentioned before, Latvia is and still remains to be our flagship market. It does have the largest portfolio out of all the markets. And essentially, Latvia is where our kind of, let's say, the global expansion, where the global expansion has started of Mogo. And this is where all the know-how is housed pretty much. And out of Latvia, Riga, we have been exporting our secured lending services across all the 14 markets where we operate currently. If we turn to the next slide, so here's a brief history of Mogo Latvia. Mogo Latvia was founded back in 2012, and shortly after, 2 years after, in 2014, a first bond was issued, and it was shortly after the issuance, it was listed in the Baltics regulated market. And which is pretty much the gold standard of the Baltic exchanges. And throughout its history, Mogo Latvia has funded more than 170 million of loans, which roughly equates to almost 60,000 cars. If we turn to the next slide, so this is a brief snapshot of Mogo Latvia and how it was doing back in 2020. So it did have a portfolio of 26 million. We still have the largest customer base out of all the markets, which is 13,000 of customers. And undeniably, Mogo Latvia is one of the market leaders in its niche segment, which would be the used car finance. And Latvian market is actually one of the few markets where we have quite a wide product offering for our customers. We do offer traditional car leasing product as well as a long-term rent product. And of course, there's also opportunity to obtain a leaseback product, which is essentially a loan against car collateral. And of course, since from the day one, we have been investing heavily into our IT proprietary systems, we're very much focused on the process automatization and seamless customer experience. Now, if we move on the actual financial figures of Mogo Latvia for last year and how it compares to the year 2019, we see that we have posted the record year in terms of net profitability, reaching almost 6 million for the whole year in the net profit after taxes. Our EBITDA figure remains consistently high, around 10 million euros. And with the roughly 15 million of equity, Mogo Latvia remains to be an excellently capitalized company, reaching 55% of capitalization ratio. Now, if we turn to the actual bond offering or the new bond issuance, here I think the very key aspect is that this is not a new debt raise activity. This is a refinance activity. So we are not adding to the leverage of the company. We're not adding to the leverage of the group. We are offering all the current bondholders of two current Latvian bonds, which are in the amount of 20 and 10 million, to roll over their investments into a new bond of a 30 million total size, which this time will be guaranteed also by our parent entity. So essentially, there's going to be a group guarantee attached to these bonds. If compared to the current two bonds, a new bond will actually have a higher coupon rate, so it will be 11%, and it will still be paid out on a monthly basis. And of course, we do want to incentivize our current bondholders to roll over their investment. We also do encourage new bondholders to invest in these bonds. And for that, we do have one-time premiums built in the offering. So all the current bondholders, they can roll over their investment with a 2% premium, which will be paid out at the end of March. And also new bondholders, they also do have the opportunity to earn the same 2% premium in case they put an order in the size which is larger than 200,000 euros. The bond, from the technical aspects, it will have quite a customary terms. So a 3-year term with a bullet payment at the end of the maturity, also a call option, which is a fairly standard term in most of the corporate bonds. And the nominal value is 1,000 euros. So all the bonds that Mogo has issued historically, they have carried this nominal amount of 1,000 euros, because we do see the value in the large retail investors base and in a quite a large retail following base from investors community. And of course, so this bond, as mentioned, I think also previously, will also be listed on Nasdaq Baltic regulated market. Again, a gold standard in terms of exchanges. What it means for investors, it does mean that there are higher disclosure requirements when it comes to the provision of the financial information as well as non-financial information. The issuers need to have financial statements prepared according to IFRS, which of course need to be audited. And of course, there is a regulatory aspect involved as well. In terms of covenants, the covenants will be equal to our current Eurobond covenants, with the interest coverage ratio being at least 1.25 times and capitalization ratio at least 15%. Both, as of this moment, are well exceeded if we look at the end of year 2020 figures. Okay, so I think that's it on the actual issue. Question: how to become a Mogul bondholder? So first and foremost, any potential investors, they would need to make sure that they do have securities or custodian accounts opened with their respective banks. This is actually an account which does not have any cash movements. This is an account where after the purchase of the bond will be essentially kept. So after that is being taken care of, all the investors are encouraged to reach out to their respective banks and actually send the information about willingness to participate in the purchase of Mogul bonds. As mentioned previously, each bond does carry a nominal value of 1,000 euros. That means that the investment can start also with 1,000 euros, and it goes in 1,000 euro increments thereafter. And of course, each month the monthly coupon payment will be deposited into each investor's bank account. This is, I would say, as passive investment as it gets, because after the first purchase of the bond or the first investment, the investor pretty much needs to do nothing, as the monthly coupon payments would be deposited automatically by their banks. And of course, one of the main aspects of investing into a bonds, the bond is essentially a transferable security. So if investor by any means would like to sell the bonds, and if there's buyer for that, that can be quite easily arranged, either through Nasdaq Stock Exchange or through a bilateral deal with the buyer. And then with this here, I would like to also emphasize that the current subscription period ends on the 25th of February. So this is pretty much the last date until which you would need to get in touch with your banks to make sure that either your current investment is rolled over or your new potential interest is being serviced by the bank and processed by the bank. So on the 1st of March, the existing bondholders would see in their securities accounts their old bonds being converted to new ones, and on the 2nd of March, all the new bondholders would see in their custodian accounts the new bond of Mogo. And I think one of the last slides would be our Mogo info lines. So we have set up these lines where Mogo employees are encouraged to answer all the potential investors' questions. Quite an important caveat on this one would be that these lines are not set up to provide investment advice. These lines are here to answer technical questions about the potential purchase of the bond, as well as we can direct to any publicly available information about the bond itself, about its terms, the prospectus, and also about the company. I think with this one, we have concluded our presentation. And I think we're ready for Q&A session.
Thank you for the presentation. Now let's proceed with the questions. But before, a reminder to those who haven't yet submitted their questions that you can do it in the questions box in the settings panel zone. So the first question, how COVID-19 has affected Mogo business, for example, loan repayment terms?
Thank you for the question. So first of all, COVID-19 has been already a continuous process. So here we need probably to split it in parts. So first of all, when did we as a business felt biggest effect from COVID? We felt it in March, April, and May. This is when really this first COVID wave hit the world, hit the Baltics. And of course, then we felt also that our customer payment behavior started to change. But here I want to stop and maybe explain a little bit more how and in what market. So what we initially saw, that in markets where the movement restrictions were curfews and similar type of, I would say, extreme measurements were not imposed, and Baltics were one of those markets, we saw almost no deterioration of our portfolio. That means that customers continued to pay. We obviously, as a company, also provided them additional tools. We allowed them maybe pay for a few months only partial payments, or make an extensions paying only interest rate. But in general, like the payment discipline stayed very stable. Maybe it has slightly decreased by a few percentage points. In some other markets, I could give as an example as Georgia, for example, where these payment moratoriums imposed by regulators were more extreme, and we as a regulators had to even allow customers not to pay for a few months. There, of course, customers have used that opportunity, and together with the fact that also these more strict restrictions were imposed, it had an effect. But what we saw, that actually after these curfews has finished, and in most of the cases they have finished at around May, that all the time we kept constant contact with the customer. So once those moratoriums and restrictions have finished, customers actually, most of the customers turned back to regular monthly payments. So we kind of combined as a group. We actually felt distractions in first few months, but afterwards we managed to recover very fast. And in third quarter, and most importantly in fourth quarter, when we have a second COVID wave, we actually don't feel any substantial effect to customers' behavior. And also partially why we can explain that, because when first COVID wave there was a lot of uncertainty. People did not know what's expected now. Most of the people, they know they are like already taking this COVID situation almost as business as usual. And also since there's a solution, let's say, to this COVID problem in terms of vaccination, and also governments are supporting businesses, we actually don't feel any significant effect. And then even in January, and then already like being in mid-February, we see that client behavior have not deteriorated because of that.
Thank you. The next question, how do you explain coupon rate increase from current 10% to new proposal of 11%?
Sure. So thanks again for the question. The current increase, I would say, is a very small one. I would not even call that much of an increase at all. So basically, the current 11% coupon, it does reflect the overall market sentiment in the capital markets in general, when it comes down to high yield bonds in general. And that actually corresponds to average borrowing rate if we look at the Mogo borrowing book as such. So this tiny increase is a reflection of the pretty much current market environment.
Thank you. Next question is regarding brokers. So any input for a Nasdaq Baltic broker for non-Baltic investors?
Yeah, so this sounds like a quite technical question. Not sure if that was a question addressed to us as an issuer or maybe Nasdaq in general. Also, question kind of asks about the broker. So what we do know that investors also outside of Baltic states can purchase our bonds, and we do have investors also from other European states. However, that investment is like investor who would like to purchase our bonds outside of Baltic states would really need to want that, because that investor would need to find a bank who has an open trading lines with any of the Baltic banks. So technically, such investment can be processed, although I don't think that would be a very seamless process in general, unlike any local Baltic bank.
What are the growth prospects of Mogo for the nearest future?
Thank you for your question. So when it comes to growth prospects, what I showed at the beginning, that currently we are operating in 14 markets, and that's big amount. Also, we have 3 markets which we call developing markets. So that just in the name itself, that means that they still have a big growth potential. But even in the developed markets, we see that there is a growth potential in every single market. So first of all, we are focusing on growth in existing markets. We are not planning we're not planning any geographical expansion as of today, looking 1 year in the future. And we do believe that we can grow our portfolio at least by 50% more in our existing markets. Of course, not through the period of 1 year, but through multiple years. So we do plan to grow. We will be especially focused on profitable growth when it comes to next few upcoming years, and we will be mainly focused on the current geographies where we operate.
Thank you. The next question is for clarification. So by premium, you mean some sort of cashback bonus for investors that they will receive, or premium investors have to pay over nominal value?
Yes, so thanks for the question. The answer is the first one. So it is a one-time cash payment that will be paid as of the end of March for existing bondholders and for the new ones who would exceed the certain order requirements. So just to repeat it, it's a one-time cash payment.
Which Mogo will pay to the investors.
Thank you. So currently the last question. If the bonds offering will be overbooked, then what are going to be the principles of bond distribution?
Yeah, so currently, as of this moment, we would not be able to disclose the exact distribution in case of oversubscription. However, we do believe that the existing bondholders might have the priority, and then the remainder of the oversubscription we would try to allocate on an equal basis.
We have received another question. So could you please describe your current funding structure, bonds, crowdfunding, etc., and cost of debt?
Yes, so I will focus more on Mogul Latvia current funding structure. So it is a mix essentially of bonds, crowdfunding, which would be through the peer-to-peer marketplace, as well as the bank credit line. So bonds, I think we have just spoken about those. I guess the person would know the mechanics of the bond as such. The peer-to-peer marketplace loans, which equate roughly to 10 million euros in the case of Latvia, These actually work in such way that Mogo Latvia does issue loans from its own balance sheet, after which the loans are being put in the P2P marketplace, and investors are able to invest fully or partially in those loans. And as we do get the cash flows from our customers, we would process them and forward them on towards peer-to-peer investors. And then we also do have a local bank's credit line. This is the cheapest out of all the funding sources that we have. It carries an annual cost of below 10%, but altogether a blended cost of funding rate for us would be somewhat in the middle of 10 to 11% if we look at the whole capital structure of Mogo Latvia.
Thank you. Then we have received another question. What's the selection process for loans placed in Mintos? Maybe you could answer this.
Sure. There is actually no specific selection process. All loans that are issued from our own balance sheet pretty much have an equal chance to end up in the peer-to-peer marketplace platform, and this is quite an automated process with the pre-settings being set up, and then given the fact that we are a fintech company in our DNA, all the loans selection and further transferability to Mintos platform is pretty much done automatically.
Thank you. Then another question, what exactly group guarantee means for this bond?
Yes, so the group guarantee, which is issued by Mogo Group's parent entity, means that in case Mogo Latvia will not be able to service its debt towards bondholders, meaning either pay a monthly coupon rate or repay the principal at the end of the term, that bond will be settled by the parent entity of Mogo.
Thank you. So all questions now are answered. Recording of the webinar will be available on Nasdaq Baltic YouTube channel and also in company's announcements. Gentlemen, thank you for the presentation and for answers given. Participants, thank you for joining and participating. Until next time.
Thanks, everyone.